Looking at powering up your portfolio with utility. So utility stocks are equities and companies that provide essential public services like electricity, water, natural gas, and telecoms. If you're on the monopoly board, you certainly don't want these as your core portfolio. You kind of want the boardwalk type stuff usually. Next slide here. So utility stocks are often used by investors as defensive options during market drawdowns. Because they have higher dividends and are less volatile generally than their growth counterparts. Here are the current annualized dividend yields and volatility of the 5 biggest U.S. utility stocks. Some of these might be interesting plays if you think that the Trump portfolio continues. Maybe there's some of those in there too. And you can see the yield on these in just the 30-day implied volatility. They're very low, generally very low implied volatility underlings and you'll see on this next slide here, that a lot of their movement is much less volatile to both directions, upside and downside. That's why a lot of people, like to trade these or be in these. XLU is one of the ETFs that is the most popular in this space. It has a lower correlation, smaller percentage swings compared to the market overall, making it a good choice for defensive positioning. So if you're looking to get into something that's a little bit less volatile in both directions, maybe you look at the utilities. You can see in April-ish when we had that drawdown in the market, they had much less of a drawdown. You could see through the rally, they've had much less of a rally. That's kind of this space here.
Okay.
Getting on to the next slide here, the utility stocks can be impacted negatively by rising interest rates. This is one of the issues with these stocks and kind of over the last year or so with rate hikes, why they haven't performed as well to the upside. High interest rates can put downward pressure to utility stocks due to their high levels of debt. It's also a look at risk-free rates here because increasing rates makes alternative investments more sexy,
for
lack of better words, versus something like dividend stock, because that, you look at these stocks
it's old thinking.
It's old thinking as like a comparison of risk-free rates. Risk-free versus a dividend yielding stock, the dividend has to be significantly higher for you to take any risk in that versus just...
You do have principal risk.
Yes, versus...
Guaranteed 5%.
Yes.
Just use round numbers.
Yes. And so we're going to take a look and see if it's like worth investing in some of these or at least what time periods they have performed well. So looking at the next slide here, so utility stocks are strongly correlated to each other, but have low correlations with other stocks, making them candidates for diversifying in your portfolio. So if you're looking at these compared to SPY or the Qs or IWM, even single names, we put Apple in here as like the key comparison. You can see there's basically no correlation here. So, if you're kind of trying to take some risk off or diversify or put something on that doesn't have as much correlation to some of the Mag 7 stocks or the tech stocks that have been flying around, these, have a place. There's a place for that. They do that. Yes, exactly.
Clearly.
They don't take you out of the markets, because when we saw the price comparison of these versus the market as a whole, they still kind of move with the market, but they have a much lower beta to the market. So the next slide here, just looking at XLU versus TLT, just a rolling correlation, you can see it's not really correlated as much to TLT. So there's very little correlation. It's less than 0.25 over the long run. So even if we already have equities and bonds, adding utility stocks can diversify further. So just showing more that this is kind of a way to get into something new.
Very good.
Next slide here. So high interest rates can have a negative impact on utility stocks, reducing their dividend yields, making short plays more attractive. And by reducing their dividend yields, it's the spread of their dividend versus risk-free rates. That is what is being reduced. The actual dividends themselves might not change. They might be the same, but the spread between risk-free rates and those dividends is widening when interest rates go up. So any pullback in the markets or changes in the Fed inflation capping plans could potentially cause a recovery in utilities. So as they decrease interest rates. These can potentially go higher because the yield on these gets higher relative to the risk-free rates. And so,
Sure.
that is something that could potentially happen. I mean, you're seeing something like gold go nuts to the upside, and that has no yield, and that has
Sharply to the upside, by the way.
sharply to the upside, but that also is affected by interest rates as well, because if you're, looking at cash that yields 5%, but it's going to go down to 4 or 3%, you might be more inclined to take the risk of something like GLD that doesn't have any yield to it because those rates are coming down. You're getting paid less to hold cash. Why not take more risk? I mean, these are just market dynamics that happen, over the years. So getting on to the next slide here, we've got two more real quick. So finally, let's compare the 45-day 30 delta puts in XLU and TLT. And these are small, these average daily P&L of a couple bucks is nothing, sexy, but it is what it is. They have a high success rate here, but these are very low volatility trades. So we've had low volatility. If you are kind of fearful of downside movements, maybe we move a little bit into these stocks here. Finally, a couple takeaways here. So utilities act as a defensive sector, offering steady dividends, lower volatility than growth stocks. Higher interest rates pressure utilities by raising borrowing costs and drawing investors towards higher yielding bonds. Conversely, if rates come down, these look a little bit more attractive. Utilities, low correlation with both equities and bonds makes them an effective diversification in mixing up your portfolio. So if you're looking for a little something different, maybe you look at some of these here with markets at highs and